Let me start with a story that might feel uncomfortably familiar. You open your trading app in the morning. The market moved against you overnight. Your position is bleeding. At first, you tell yourself it will come back. Then your heart rate speeds up, your hands feel cold, you refresh the chart again and again. Panic takes over, close the trade at a loss. 5 minutes later, the market reverses. Now the real damage begins. You feel stupid, angry, ashamed. You tell yourself you should have held. Without thinking, you jump into another trade, bigger size, no plan. A revenge trade. By night, you're staring at the ceiling, replaying charts in your head. Sleep doesn't come, is beside you. Your mind is still in the market. This isn't just a bad trading day. This is mental trauma, and almost nobody talks about it. Traders are trained to protect money, not the mind. You learn about stop loss, risk, reward, position sizing, entries and exits. But nobody ever teaches you how to protect your nervous system, how to recover after emotional losses, how to trade when your confidence is cracked, how to stop your brain from turning against you. So what happens is simple. You may follow rules on paper, but inside you're falling apart. And here's the truth: most traders learn too late. Mental losses happen before financial losses. Always. Before your account blows, your mind blows. Before the big loss, emotional leakage. Before discipline disappears, comes exhaustion. Before strategy fails, comes self-doubt. You don't suddenly become a bad trader. Become a mentally overloaded human trying to make decisions under pressure. The market doesn't destroy you. Unprocessed stress does. Stress doesn't announce itself loudly. You hesitate on good setups. You overtrade on bad ones. You check charts compulsively. You feel on edge even when you're not in a trade. You can't enjoy wins. Losses feel personal. That's not a skill issue. That's invisible damage. Think about this for a second. You carefully calculate that you'll risk only 1% per trade. You define exact exit levels. But where is your emotional stop loss? Where is your mental circuit breaker? Where is the rule that says stop when your mind is overloaded? Doesn't exist. So the market keeps taking tiny pieces of you every day. Not your capital, your clarity. And once clarity is gone, money always follows. Blow accounts, you blow your mindset first. Account blow-ups are just the final scene of a much longer story. A story that starts with ignoring fatigue, ignoring anxiety, ignoring frustration, ignoring the need to step back. You tell yourself, just one more trade, I'll recover tomorrow, this is normal. It's not normal, dangerous. Trading doesn't just test your strategy, it attacks your identity. A losing streak doesn't feel like you lost money. It feels like you're not good enough. Maybe you're not made for this, like others are winning and you're falling behind. Your self-worth slowly gets tied to your P&L. Green days give confidence. Red days create self-hate. That's not trading anymore. That's emotional gambling. Be honest with yourself for a moment. Have you ever avoided opening your trading app because you were scared to see the damage? Have you ever broken rules even though you knew better? Have you ever felt mentally tired before the session even started? Have you ever made money and still felt anxious or empty? If the answer is yes, this is for you. One of the most ignored signs of invisible damage is sleep. Your body is tired, your eyes are heavy, but your brain won't shut up. Charts replay. Entries replay. Mistakes replay. That's not discipline. That's a stuck nervous system. Your brain is still in survival mode, and a brain in survival mode cannot think clearly, follow rules, manage risk, or stay patient. Yet you still show up the next day because nobody told you that rest is part of risk management. You can have the best strategy, the best mentor, the cleanest setups, but if your mind is damaged, you won't execute properly, you won't size correctly, and you won't exit on time. The market doesn't punish bad people. Punishes unstable mental states. Most traders are trading in unstable states without even realizing it. Trading education talks about entries, exits, psychology in theory, but not about emotional recovery, mental fatigue, nervous system overload, or identity damage. So traders blame themselves. They say they are weak, blind, inconsistent. The truth is simpler and harder to accept. You're overloaded. If you've ever felt mentally exhausted but still pushed, emotionally numb after losses, angry at yourself more than the market, or confused about why you keep repeating the same mistakes, this isn't here to shame you, here to wake you up. Awareness comes before recovery, and recovery comes before consistency. The market doesn't break traders overnight, breaks them quietly through stress, pressure, and silence. And by the time most people notice, the damage is already done. But if you're hearing this now, you're early. The market doesn't just move prices, it moves your brain. And most traders don't realize this until the damage is already happening. You sit in front of the screen thinking you're making rational decisions, but the truth is your brain is being hijacked in real time. Volatility doesn't test your intelligence, overrides it. Red candles hit the screen and something inside you tightens. Your chest feels heavy, your breathing changes. You don't say it out loud, but your body reacts before your mind does. Panic starts whispering, "Get out, save yourself, do something now." You exit too early. You cut winners short. You abandon plans you were confident about just minutes ago. Then the market goes green, big green candles. Suddenly your brain flips. Now it's not fear, it's urgency. What if it keeps going? What if you miss this move? What if this is the one? You jump in late, at the worst price, chasing momentum with no edge. That's not strategy, that's FOMO. And it feels powerful because your brain thinks opportunity equals survival. Add breaking news into this mix and chaos explodes. Headlines flash, social media screams. Everyone has an opinion. Fear spreads faster than logic ever could. You feel pressure to act even when you don't understand what's happening. Volatility turns the market into emotional noise, and your brain isn't built to filter it calmly. Here's the part most people don't understand. Under stress, your brain doesn't upgrade, it downgrades. Logic shuts down. The thinking part of your brain goes quiet. The survival part takes over. Is the same system designed to protect you from physical danger, not financial decisions? When volatility spikes, your brain treats the market like a threat. Heart rate increases, focus narrows, time feels distorted. All you can think about is immediate action. That's survival mode. And survival mode is terrible at trading. Survival mode, your brain only asks one question: how do I stop the pain right now? Not what's the best probability. Not what's my plan. Not what's my edge. Stop the discomfort. That's why smart, educated, experienced people still make dumb trades. It's not because they don't know better, because knowing disappears under pressure. Think about a casino for a moment. The lights, the sounds, the flashing screens. Everything is designed to keep you emotionally stimulated. You don't walk in planning to lose control, but the environment slowly pulls you in. Markets during volatility work the same way. Fast candles are like spinning wheels. Wins feel euphoric, losses feel personal. Your brain starts chasing relief instead of returns. Or think of a roller coaster. When it drops, your body reacts instantly. You can't think your way out of that feeling. Lifts. Your hands grip tighter. Volatility is that drop over and over again without time to recover. Or imagine a battlefield. Loud noise, constant movement, uncertainty everywhere. Even trained soldiers don't perform at their best under non-stop pressure. They rely on drills, structure, and rest. Traders expect themselves to make perfect decisions in chaos without protection. Your brain is not designed for markets. It's designed for patterns, stability, threats. Markets are abstract, unpredictable, and emotionally loaded. Red candles feel like danger. Green candles feel like reward. News feels like urgency. Your brain doesn't see charts. It sees threats and opportunities to survive. That's why volatility disables logic. It floods your system with stress hormones, narrows your thinking. It pushes you toward impulsive actions. You start trading faster, thinking less, reacting more. You stop waiting. You stop confirming, trusting your own rules. And afterward, when the market calms down, logic comes back. You look at the chart and say, "Why did I do that?" It seems obvious now, but in the moment, your brain was hijacked. This is exactly why people say, "I don't understand myself when I trade." Outside the market, you're calm, intelligent, disciplined. The market, especially during volatility, you become someone else. That's not a character flaw. That's biology. Greed and uncertainty are not emotions you choose. They are automatic responses. Fear pushes you to escape losses. Greed pushes you to grab gains. Uncertainty freezes decision making or forces random action. Volatility amplifies all three at the same time. That's why it feels overwhelming. One minute you're scared, you're hopeful, the next you're confused. Your nervous system doesn't get a break. And when the nervous system is overloaded, mistakes multiply. You overtrade, you change strategies mid-session. You double down, you hesitate. You chase, you freeze. All of this can happen in the same day. Then you blame yourself. You say you lack discipline. You say you're emotional. You say trading psychology is your weakness. But the real issue is simpler. Asking a human brain to operate in an environment it was never designed for, without safeguards. Volatility is not just price movement. It's a psychological assault. Hits your attention, your confidence, your patience, and your identity all at once. And the worst part is, it feels normal because everyone else is experiencing it too. You think this is just how trading is supposed to feel. constant tension, constant alertness, constant pressure. It's not. It's a sign that your brain is in survival mode too often, for too long. If you've ever felt your heart race during fast moves, if you've ever entered a trade just to stop the feeling in your chest, if you've ever ignored a perfect setup because you were too emotionally tired, if you've ever chased a move you knew was late but couldn't stop yourself, then this is you. This is exactly you. And the most important thing to understand is this: you are not broken. Your brain is doing exactly what it was built to do. The problem is the environment. Until you understand how volatility hijacks your brain, you'll keep fighting yourself instead of the real enemy. Most traders have heard of a stop loss, but almost nobody has heard of a mental stop loss. One missing concept is the reason so many smart people keep repeating the same mistakes. A financial stop loss protects your money. A mental stop loss protects you. In simple words, a mental stop loss is a rule to exit emotionally, not financially. It's the moment you stop trading not because the chart says so, because your state of mind says so. Price can still be moving. Opportunities can still exist. But you step away because continuing would do more harm than good. One rule changes everything, because it attacks the real problem, not the surface one. Think about how you use a normal stop loss. You define a level where the trade idea is invalid. If price hits it, you exit without debate. You don't argue with the chart. You don't negotiate the loss because you know staying in would be reckless. A mental stop loss works the same way, except the signal is internal. It activates when you become unstable, not when price does something wrong. The problem is, most traders only respect financial limits. They say, "I'll lose money responsibly," but they never say, "I'll stop trading when my emotions take over." So they protect capital while destroying clarity, and clarity is the real edge. A financial stop loss says, "Trade is wrong." A mental stop loss says, "I am not in the right condition to trade." One protects your account balance. The other protects your confidence and your decision-making ability. Without those three, no strategy works. Now here's when a mental stop loss should activate. First, after consecutive losses. Not because losses are bad, but because losses stack emotional pressure. One loss is information. Two losses create doubt. Three losses start changing behavior. You begin to hesitate, then force trades, then question your system. That's the danger zone. A mental stop loss says, "No for today." Not because you can't recover, but because recovery tomorrow is cheaper than damage today. Second, when emotions spike. This can be fear, anger, excitement, or desperation. Your heart rate increases, feel rushed. You feel irritated at the market. You start talking to the screen. You feel a need to act now. That's not intuition. That's stress. Stress makes urgency feel intelligent. A mental stop loss interrupts that loop. It forces a pause before impulse turns into action. Third, when discipline breaks, is the most important one. The moment you break one rule and justify it, the system collapses. Stop, just this once. You take a setup that doesn't fully match your criteria. You increase size to make it back faster. These are not strategy decisions, or emotional leaks. A mental stop loss activates the moment you notice rule bending. It says, "Step away before this becomes a habit." What does a mental stop loss protect? First, confidence. Confidence doesn't disappear after one bad trade. It disappears after repeated emotional decisions. When you stop trading while you still respect yourself, confidence stays intact. Second, discipline is not willpower, it's structure. A mental stop loss is part of that structure, removes the need to be strong in moments when strength is biologically unavailable. Third, decision-making ability. Good decisions require a calm nervous system. Once your system is overloaded, every choice becomes reactive. Stepping away restores your ability to think probabilistically instead of emotionally. Now visualize this for a moment. You take a loss, you feel frustration rising. Instead of opening another chart or forcing a new trade, you pause. You close the platform, up, you step back, you breathe. The market keeps moving without you. Nothing collapses. The world doesn't end. But something important happens inside you. Your nervous system resets. Your identity separates from the last trade. You stop bleeding mentally. That pause is the mental stop loss in action. Most traders fear stepping away because they think discipline means staying engaged. In reality, discipline often means knowing when not to participate. The market will always be there. Your clarity won't be if you keep draining it. A mental stop loss is not quitting. It's protecting future performance. It's saying, "I care more about long-term consistency than short-term action." This is why professionals survive and amateurs burn out. Professionals know that trading in a bad mental state is not neutral. It's negative expectancy, no matter how good the setup looks. Rule changes everything because it shifts control back to you. The market no longer decides when you stop, you do. And that creates safety. Safety creates calm, creates better decisions. Better decisions create consistency. Most traders are trying to fix results without fixing states. They tweak strategies, indicators, time frames, but they keep showing up mentally compromised. A mental stop loss fixes the root. It acknowledges a hard truth: you are not a machine. Your brain has limits. Hitting those limits is not weakness, it's professionalism. Once you adopt this rule, trading changes. Losses feel lighter. Wins feel cleaner. Sessions end with clarity instead of exhaustion. You stop fighting yourself. You stop forcing outcomes, treating your mind like the most valuable asset in your trading account. Because it is. Money can be replaced. Confidence takes longer. Discipline takes longer. A damaged decision-making process takes the longest. A mental stop loss is how you prevent that damage before it compounds. And once you truly understand this, you'll realize something important. Most traders didn't fail because their strategy was bad. They failed because they stayed in the game emotionally long after they should have stepped out. Building a mental stop-loss system is not about motivation or willpower, about structure. You don't rely on how you feel in the moment, because feelings are exactly what get hijacked under pressure. You decide the rules in advance, while your mind is calm, and then you obey them when your emotions try to take control. That's the difference between reacting and managing yourself. Step is emotional awareness, because you can't stop what you can't recognize. Before every session and during it, you need a simple internal checklist. Ask yourself quietly: am I calm or tense? Am I patient or rushed? Am I focused or scattered? Am I trading a plan or trying to fix something? You're not judging the answers, you're observing them. The moment you notice irritability, urgency, tunnel vision, or a strong need to make money back, that's data. Most traders ignore this data and keep trading. Your system does the opposite. It treats emotional signals the same way you treat technical ones. If a level breaks, you act. Your emotional state breaks, you act. The second step is defining a maximum emotional drawdown, just like financial drawdown. Is a hard rule, not a suggestion. Decide in advance what emotional damage you're willing to tolerate in a session. For some, it's 2 consecutive losses. For others, 1 rule break. For others, it's a specific feeling, like anger or desperation. The exact number doesn't matter as much as the commitment. When that limit is hit, trading stops for the day. No 1 more trade. No I see a perfect setup. No negotiation. This protects you from the most dangerous moment in trading, which is when you're still functional enough to click buttons but no longer stable enough to make good decisions. The third step is a mandatory break system. Not a vague idea of rest, but a defined action. When your mental stop loss is hit, you physically step away from the trading environment. You close the platform. You leave the room. You change your posture. This matters because your brain associates the screen with stress. Staying there keeps the loop alive. A real break interrupts the stress response. Even a short walk, a glass of water, or fresh air tells your nervous system that the threat is gone. Walking away is not weakness, power move. It's saying, I'm in control of my participation, not trapped by the market. The fourth step is a pre-defined reset ritual. This is what you do after you stop, not to force calm, but to allow it. A reset ritual can be simple and boring, and that's a good thing. Writing a few lines in a journal about what you felt and what triggered the stop. Stretching, breathing slowly, doing something physical that brings you back into your body. The key is consistency. The ritual becomes a signal to your brain that the session is over and recovery has started. This is where journaling matters, not the way most people do it. Journaling is not about replaying the market or punishing yourself. It's about documenting your state. What did I feel before the loss? Changed after it? Where did discipline start to slip? Writing creates distance. It turns emotion into information. Reacting keeps you inside the emotion. Journaling pulls you out of it. Over time, patterns emerge. You start seeing that your worst days don't start with bad trades, they start with bad states. That awareness alone saves money. Now let's talk about why walking away actually makes you stronger, not weaker. Most traders believe discipline means endurance, staying in the chair, pushing through discomfort. But endurance under emotional stress doesn't build skill, it builds damage. Professional behavior is knowing when your edge is gone for the day. When you step away early, you preserve confidence. You end the day respecting yourself instead of feeling ashamed. That respect compounds. The next session, you show up calmer, clearer, and more patient. Traders who survive long-term are not the ones who trade the most. They are the ones who stop at the right time. You've probably seen both types of traders. The ones who paused after a rough period, reduced size, stepped back, and slowly rebuilt. They didn't disappear because they protected their mindset. Then there are traders who ignored every warning sign. They chased losses, broke rules, increased size, and told themselves they were being tough. On the outside, like confidence. On the inside, it was panic. Those traders didn't collapse because of one bad day. Collapsed because they stayed emotionally exposed for too long. A mental stop-loss system prevents that slow collapse. Turns self-control into a process instead of a personality trait. This is why this part is worth saving. Not because it sounds good, but because it's usable. You can write your emotional checklist today. You can define your emotional drawdown today. You can choose your break rule and your reset ritual today. None of this requires a new strategy or indicator. It requires honesty and structure. The market rewards people who can protect their decision-making ability. Stop trading while you're still mentally intact. You win even if the day ends red. Because you didn't let one session steal tomorrow's performance. Over time, system changes how trading feels. Sessions become shorter but cleaner. Losses feel contained instead of overwhelming. Wins don't make you reckless. Stop swinging between extremes. You operate in a narrower emotional range, and that's where consistency lies. This is not about avoiding stress completely. Trading will always have pressure. It's about limiting exposure. Just like you don't risk your entire account on one trade, you don't risk your entire mindset on one session. A mental stop-loss system is how you cap the damage before it spreads. And once you build it, you'll realize something important. The traders who last are not the ones who never feel emotion. They're the ones who know exactly when to step back before emotion starts making decisions for them. In the long run, trading stops being about finding the perfect setup and starts being about protecting the one thing that makes all setups work. Your mind is where the real separation happens. Not between smart and stupid, not between lucky and unlucky, but between those who last and those who burn out. Elite traders think differently because they've learned something most people learn too late. Capital is replaceable. Mental capital is not. Money can be earned back. A damaged mindset takes time, energy, and often confidence to rebuild. That's why professionals are willing to stop early, miss trades, walk away from good opportunities. They're not afraid of missing profits. They're afraid of damaging their decision-making ability. And that fear is intelligent. When you protect your mental capital, everything else improves naturally. Emotional stability becomes your default instead of something you chase, swinging between fear and excitement. Losses no longer hijack your mood for days. Wins don't inflate your ego. You remain grounded in both directions. Stability creates consistency, not because you trade more, but because you trade from a clearer state more often. Consistency is not about being right all the time. It's about behaving the same way regardless of outcomes. That only happens when your nervous system is regulated. Over time, confidence under pressure develops. Not fake confidence, not hype, but quiet trust. You know that even on bad days, you'll protect yourself. You know you won't spiral. You know you won't betray your own rules to chase relief. That kind of confidence doesn't show loudly, but it holds when things get uncomfortable. Is why success in trading needs to be reframed. Survival comes before profits. If you can't stay mentally intact, no amount of edge will save you. Matters more than excitement. Excitement feels productive, but it's unstable. Discipline feels boring, but it compounds. Traders who chase excitement burn energy fast. Traders who prioritize discipline build careers slowly and sustainably. Over years, not months, this approach changes everything. Drawdowns become manageable. Recovery becomes faster. Your relationship with the market becomes neutral instead of emotional. You stop needing the market to validate you. You treat it as a professional environment, not a personal battlefield. This calm distance is what most people mistake for confidence. In reality, it's respect for the process and respect for your own limits. The market will always be loud. Prices will spike. News will shock. Opinions will scream. None of that will ever stop. The only thing you can control is the state you bring into that noise. The traders who win long-term are not the ones who predict better. They're the ones who protect their clarity when others lose theirs. They don't try to dominate the market. They manage themselves, the real edge that never shows on a chart. The market is loud. Your mind must be quiet.